Anthony Grasso here, bringing you financial news you can use. In this video, I'm going to do a stock analysis on Thermo Fisher Scientific. Can this large growth stock continue to outpace market expectations? Well, let's find out together. I'm going to go over a summary of the company, its product offerings, recent headline news, financials, analyst projections, and give it my buy, hold, or sell recommendation for both your short-term and long-term growth investors. And as always, folks, don't forget to smash that like button down below and consider subscribing and hit that notification bell if you like to hear daily stock reviews and recommendations from an unbiased source. All right, so let's get right into it. So Thermo Fisher Scientific provides analytical and other instruments, laboratory equipment, software consumables, reagents, instrument systems, chemicals, supplies, and services worldwide. The company's different segments include the life sciences solutions, analytical instruments, specialty diagnostics, laboratory products, and services. I can sum up the entire company by saying Thermo Fisher supplies equipment to medical consumers. It sells everything from consumables like syringes to chemicals and software. But right now, it's the leader in COVID-19 testing, which has lifted its stock price recently. The stock is up more than 100% from the coronavirus crash of lows. Now let's go ahead and look at some news of the company. So recently, last month, Thermo Fisher Science acquires the viral vector manufacturing business from Novacep. That expanded global capacity addresses growing demand for cell and gene therapy. Now, it was said that Novacep's viral vector business is an excellent strategic fit as Thermo Fisher continues to expand its capabilities for cell and gene vaccine and therapies globally, said Michael Lagarde, Executive Vice President of Thermo Fisher. The addition of their manufacturing capabilities in Europe, it complements our 4 development and manufacturing sites in North America. In addition, they bring an incredibly talented team with more than 2 decades of experience across a broad range of viral sectors. Now, the combination will benefit their global customers seeking support and capacity in the region, as well as European customers bringing new medicines to patients inside and outside of Europe. So that's definitely great news. And other news recent of the company, they had their Q4 earnings and revenues. It topped estimates completely. Now, it came out with a quarterly estimates of $7.09 per share. That is beating the Zacks consensus estimate of $6.86 a share. This compares to earnings of around $3.55 a share about a year ago, so definitely outpaced itself. And now these figures were adjusted for non-recurring items. Now, the quarter report represents an earnings surprise of about 3.35%. A quarter ago, it was expected that the maker of scientific instruments and laboratory supplies would post earnings of around $4.37 per share when it actually produced earnings of $5.63 a share, delivering a surprise of 28.83%. Now, over the past 4 quarters, the company has surpassed consensus earnings per share estimates 4 times in a row out of the last 5 quarters. So Thermo Fisher posted revenues of $10.55 billion for the quarter ending in December 2020, surpassing the estimate of 2.67%. This compares to year ago revenues of $6.83 billion. The company has topped consensus revenue estimates 4 times over the last 4 quarters. Now let's go ahead and look at some of the fundamentals of the company. It's currently trading at $484.72. Currently has a market capitalization of $193 billion. The current revenues for 2020 were about $32.21 billion with $6.37 billion in positive earnings. Now, earnings did grow 72.5% over the past year, and the projected revenues for 2021 is around $35.48 billion with a positive $7.39 billion in earnings. So what do the analysts say about this? Let me bring it back here. Now, the analyst consensus right now is a buy. The average stock price target is $567 with a high estimate of $600 and a low estimate of $500. Now, going over a few of the analyst reports, the Fort Equity Research Report has it as a buy and projects that Thermo Fisher will strongly outperform the market over the next 6 to 12 months. The Street Ratings is also a buy, and that is based on the convergence of positive investment measures, which should help this stock outperform the majority of stocks that they rate. The company's strengths can be seen in multiple areas, such as the robust revenue growth, largely solid financial position with reasonable debt levels by most measures, solid stock price performance, impressive record of earnings per share growth, and reasonable valuation levels. Although no company is perfect, currently they do not see any significant weaknesses which are likely to detract from the general positive outlook. I kind of agree with that sentiment. Now, looking at the valuation analysis, because Thermo Fisher is in the life sciences tools services industry and has positive earnings, the PEG, PE, and price to book ratios are the most appropriate valuation measures. The price to sales ratio is less instructive than the PE or the PEG ratio since the company has positive earnings. Therefore, Thermo Fisher seems expensive right now with the PEG value of 7.50 times above the life sciences tools and services industry median PEG of 5.24 times. However, their PE ratio is only 30.65 times below the industry median of 48.11 times. Now, the profitability analysis. Now, the company is more profitable. It's one of the more profitable companies in the life sciences tools and services industry with a net margin of 19.79%. Its net margin and operating margin are both among the strongest of any peer, while its growth margin is in line with the industry median. Now, looking at the dividend analysis, it pays an annual dividend of 88 cents a share, which at its current stock price produces a yield of 0.18%. This is below both the life sciences tools and services industry and the S&P 500's average of 0.51% and 1.72% respectively. However, few other companies in the industry even pay a dividend in their industry. Now, looking at the gross rates analysis, earnings growth at the company outpaced revenue growth over the trailing 12 months. This is a trend that is not sustainable if profits are to continue to grow at this rate. However, the result was better than the average company in the life sciences tools and services industry. Now, looking at their financial strength analysis. Now, the debt to capital ratio at 38.65% is in line with the life sciences tools and services industry's norm, despite its increase over the last year, with an interest coverage ratio of 23.16 times and a quick ratio of 1.74 times. The company should be able to comfortably repay its debt. So my buy, hold, or sell recommendation on Thermo Fisher Scientific, here are my thoughts. Yes, it is true that Thermo Fisher has outperformed the market thus so far this year. We basically have to ask ourselves as investors, what's next for the company and the stock for the near term over the next year? Through analysis, the shares are expected to perform in line with the market in the near future. Big money has been snapping up this stock, which is another important consideration. Thermo Fisher has been one of the biggest beneficiaries of COVID-19 testing. A small note of caution, though, about the testing. If testing slows into the second half of 2021 and beyond, how much of that potential slowdown will be offset by growth in vaccine therapeutic revenues, in addition to the recovery in its core business structures, will be key for the stock price and the company into the future coming up. Now, today, the shares are fully valued today, with most investors that will recognize its profits as a demonstration of steady value generation. I am a very strong, long-term bull on this stock, and I put a price target over the next 12 months at around $550 to $575 a share. I really think they're going to get there this year. So there you have it, folks. And as always, don't forget to smash that like button down below and consider subscribing and hit that notification bell if you like to hear daily stock reviews and recommendations. Until the next stock update video later today, folks. Ciao.